Another week filled with all kinds of exciting stuff. Of course, coming out of the White House, all kinds of critiques for Fed Chair Powell. I think over the last bits of time, he's called him a fool, a loser, and always late. The always late thing is kind of true. In fact, he almost admitted it a little bit in the last Fed meeting Wednesday. But why does Trump want rates lower so badly? Well, it's because it's an important part of him fighting the trade war. See, the tariffs are damaging to the economy, and lower interest rates do the opposite. They stimulate the economy. So if rates are to go down, energy prices are going to go down, that helps him fight his trade war. But as I've said many times in this video, guess what? It's really all about the labor market. That's what drives interest rates. And a lot of people are wondering, well, we've been, firing all these federal workers. Isn't that helping? Isn't that making the labor market softer? Reality is, not yet. And it probably won't, because Fed workers are such a small percentage of the labor market out there. It's not likely to make a significant impact. So if there are a rise in jobless claims and we do see some weaknesses in the market, that's when we'll start to see mortgage interest rates go down. But if you compare this year with last year, we're actually doing pretty good. In fact, we have basically 14 weeks in a row where we've seen positive mortgage application data, positive growth in demand. Why? Well, all kinds of reasons why. Well, like I said, this year, rates are actually trending down. So we started the year well over 7%, and now we're around 6.9. Well, look at last year. We were at 6.9 at the beginning of the year, and then we were on a quick climb up to 7.5. So that hurt our demand. Also, people are just getting used to the rates. They're just starting to accept the rates for what they are, higher. Those 3% loans that so many people got 3 to 5 years ago, well, those are now pretty well in the rearview mirror. And also, of course, people are still getting married. They're still having kids. They're still getting new jobs. And, people still getting divorced. So all that stuff is going to continue to put a tailwind on demand and put more buyers into the market. Now, right now, listings are growing faster than demand. So supply is growing faster than demand. So we are seeing some softness compared to where we were a year ago, a little bit more price drops. But if we can keep these mortgages stable to going down, we'll start to see even more activity in the market, and fingers crossed, a much healthier housing market in the end of 2025. If you have any questions about financing a home, give us a call. Happy Friday.